Hello, friends. This is Raman Gill with your weekly Forex market analysis for the week of March the 20th. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. We'll get started by taking a look at our economic calendar, see what news is coming out this week and how we need to trade around that. We'll also take a look at the commitment of traders data, see how the big financial institutions and funds are positioned, and then we'll get into the charts and look at our technical analysis. All right, for our Forex factory, looking at the economic calendar, we'd start off not very much on Monday here. We have the German BUBA monthly report and current account for euro, and then we have existing home sales for US dollar, which will have impact on the US. Last week we have FOMC meeting, and the Fed was really dovish, or at least the market viewed the Fed as being really dovish. They pushed the growth prospects down, and they also pushed the rate hikes for the US dollar into later in the year. And because of that, we saw US dollar take a big hit. It went down, everything else went up against the US dollar. So this week we'll look to see what else is on the slate and how that will continue this week. We'll have to look at some of our technical indicators. We'll keep in mind the news that are coming out because those could have an impact on our trading as well. We do have things like the RBA Assistant Governor Eddie speaking for Australian dollar, which will have an impact on Australian dollar. So Australian dollar has been rising against the US dollar steadily over the last few weeks. We have seen the commodity prices go up, and as a result, the Australian dollar has been really, really strong. And actually, Australia is one of the countries that actually has room to cut interest rates. At this point, they haven't cut them. However, this is one of the central banks where they do have that option. And we may see them because of all the bullishness in Australian dollar. It would start impacting the exports now. So we may see some statements or comments out of Australia or from the central bank that may drive the markets down. So when we see on Tuesday RBA Governor Stevens speaking, we'll have to be mindful of that because sometimes it's just the comments that drive the market down. And then on Tuesday, we have various manufacturing and services PMI numbers for out of the Eurozone. Here we have German IFO business climate numbers, which will be important. And then for British pound, we have the inflation number, the CPI number coming out at on Tuesday at 5:30 a.m. Eastern. And then we get German ZEW economic sentiment number, which we'll have to keep an eye on to see how the growth prospects are for the Eurozone. Going into Wednesday, we have new home sales for the US. We have crude oil inventories, which will have an impact on the oil price, and we have trade balance for the New Zealand dollar. Thursday, we have retail sales for British pound, and then we have targeted LTRO number for euro. And then we have FOMC member Bullard speaking here. And then we have core durable goods orders and unemployment claims for the US dollar. And then going into Friday, we have bank holidays. We're getting into a long weekend, so we don't have much data, just the final GDP number for the US dollar. So this week shouldn't be as crazy as last week was. Last week we had multiple central banks statements which drove the market. Well, the Fed FOMC really drove the market with the dovishness, which was with the euro being bullish and this being dovish, it just had really bad impact on the US dollar. So this week we'll be looking to see whether the market will settle down or it will continue with the dovishness in the US. So let's go into the COT data now. We're looking at euro US dollar commitment of traders data here. What we see here is the increase in short positions for euro. This would suggest the euro going down. However, this is pre-FOMC. We haven't seen the positions adjustments that got made after FOMC came out. So we did see earlier last week, euro was driven down. However, now with the readjustment of positions after FOMC, this may not be quite as reliable number. But based on this, we see that leverage money positions have short positions have increased, which means that euro US dollar should be dovish, or it should be bearish, sorry, it should go down. Let's take a look at a British pound here. Looking at British pound, we see a big shift in British pound here positions. We see this green line has gone up drastically. We went from negative 74,920 short positions, and then now we have gone to negative 26,110 short positions. So that's quite a big jump in British pound, which again points to a very bullish British pound. We'll take a look at Canadian dollar here. And here we see the short positions are, again, the green line is going up, which means the short positions are declining. They went from 33,000 to 24. Short positions are going down. And as we can see, the asset managers have already crossed into the positive territory. So basically the leverage money is they're going long in Canadian dollar, and we have seen Canadian dollar going up as well. So this is bullish for Canadian dollar or bearish for dollar CAD. For Australian dollar here, we have seen a big drop in dealer long positions, and we have actually crossed up for both asset managers and leverage funds. We have crossed up into the positive territory, and from last week to this week, we have seen an increase in Australian dollar long positions. So this would point to a bullishness in Australian dollar. Going over to the New Zealand dollar here, we see the leveraged funds have actually crossed over above the zero line, so they have gone long in their positions. And between last week and this week, we see an increase in the long positions. So this is bullish for New Zealand dollar as well. Let's move on to the charts here. We are looking at Euro US dollar weekly chart. Euro finished the week off really in the positive territory. We saw that there was a push down prior to the Fed meeting. However, it wasn't able to break the support level, 108.20 support level, and we saw a big push up from there based on the dovish comments out of the Fed. So now this week, the close is very, very bullish, and now we are into this 1336 level. So we're looking at the next level, we're looking at this 1495. And let's go to a daily chart to have a closer look. So there was a pullback on Friday, and in terms of the pullback level that we are looking at is this one here, 1200 or 1212 level. So if the price holds above this 1200 level, we may see a push back into the highs, and then potentially a move to the upside, and the next target would be 1380 level. And then above that, we are looking at approximately 1500 or maybe into 1.1450 here. So the next target being 1380 level here. So again, we need to wait and see how this goes. If it holds above 1200, then we're looking for a bullish move to the upside. If it comes back down here, if it breaks below this 1200 level, the next level that we're looking for euro would be this 1060 level. This is where the price had pushed off of last week, and this is the price we would be looking at as a potential target if the price holds below 1200 level. However, overall, this points to bullishness, so we may see a pullback into here and then another move to the upside. Looking at British pound here, we saw a move to the downside, and then it wasn't able to hold, and based on the Fed, we saw a big push to the upside. So based on the weekly candle here, this is a big rejection of the bottom and nice bullish close for the week. So this week, again, based on the weekly analysis would be looking at a move to the upside for British pound. So let's take a look at the daily levels where we may see the price react next. So on Friday, we saw a bit of a neutral close, and we may see a pullback at about 43.93, so about 4400 level. And if this level holds, we're looking for another push to the upside, and the next target that we could be potentially be looking at would be 145.70 area, and above that we're looking at a 146.60 area. This will be the next target to the upside. However, we could see a deeper pullback in the British pound here, looking at 14300 level as the potential target level, or it may come and fill some of the inefficiency. So we'll have to keep an eye on that. Based on the weekly chart, though, we are definitely looking for a bullish move. However, the price doesn't just move up, we'll see a pullback. And for the pullbacks, these are some of the levels we'll be looking at: 14400 first, and then we are looking at about 14300 for a potential pullback, and then we may see a move to the upside again. Okay, let's take a look at the Australian dollar here. Based on the weekly chart, we finally saw some rejection from the top here. However, Australian dollar did manage to close the week off in positive territory. So in this case, we may get a pullback and then another move to the upside. But this is first time in a couple of weeks that we have actually seen some price rejection from the top. So going on to the daily chart here. So this is where we are. The price seems to be pulling back in. So the pullback, that level that we'd be looking for Australian dollar would be 0.7520 level here. So this is the support and resistance area that we are watching. If the price closes below this 7520 level, the next level we're potentially looking at is 7400 level, would be the next level. And if the price holds above this, we're looking for a price move back into these highs again. So that's what we would be looking for. Let's take a look at the New Zealand dollar. Based on the weekly chart here, we do see some rejection from the top. The price did not close in the positive territory. So this is more bearish than Australian dollar would be. We did see the price go up and test into these highs. It did not manage to close up above the highs, and now we are seeing a pullback into this. So this, I think, could come down, and we may be looking for price moves back into potentially into this 6720 area, and then further down into 6680 and potentially into 6580 area. So we're looking for this price move to get reversed. In terms of New Zealand dollar, we have seen last time we did see move up in the dairy prices. However, overall, there isn't a lot of fundamentally a lot of strength in the New Zealand dollar, so there isn't anything that should really be pushing it higher. So this is one of the pairs that we may see a deeper pullback in. So we'll watch out for that. Dollar CAD here, we have seen a lot of Canadian dollar strength, mainly due to oil. Oil has been going up, and if that continues, we'll be looking for a potential move to the downside here. So Canadian dollar should strengthen, which would mean dollar CAD would go down. So here we are looking for a pullback into this 31.67 level. So we are bearish on the week, so we would expect another move to the downside. And in this case, like I said, price doesn't just go down, it will pull back and then it will go to the next level. So we're looking for potential pullback levels, which could be 31.67 area here. And then as a target, we're looking at 28.30 area. This is the next support and resistance level. And then we are back into this 25.70 area as the next potential target based on the weekly chart. Taking a look at the daily, we are seeing a little bit of a pullback, and again our pullback target would be 31.67. If it does continue higher, we could be looking into 132.20 level, and then if it stays above this level, then we could see some consolidation here above the 32.20 level, just like we saw this for a few days. But for now, we would be looking at 32.20 as a potential area for a move to the downside, or 31.70 or 68 area here that could pose resistance as well. And then we're looking at move to the downside, 128.30 level, and potentially into 25.68 level. So that's all I have for the weekly analysis for this week. Have a great trading week, and I'll see you next week.